Looking at the currency, you've been bullish sterling for a long time. And I'm curious what gives you the confidence that we are going to see such a strong bounce back in consumer activity here in the UK than the Bank of England is. What makes you so sure that we are going to see that kind of rebound?
Well, I think it's interesting that when we had the Bank of England monetary policy report, they did upgrade their estimate of the rundown of the accumulated involuntary savings over the course of the last 12 to 18 months. But they're only talking about roughly a 10% drawdown. And I think that could be a little bit conservative. They have been trying to use experience that they'd gleaned from other places that have come out of lockdown in terms of Australia and New Zealand. But I think there is a very strong consumer dynamic which will drive spending far faster than the bank's anticipating. So the bank is assuming roughly 4.25% growth in the upcoming quarter. I think that may well be a percentage point too low. I think we may well get a 5 handle in terms of quarterly GDP. And I think we'll probably see outperformance in Q3 as well as the consumer continues to come back in fairly significant size into broader spending. And I think that will drive the economy somewhat faster than the bank is anticipating. And I think that will continue to validate market assumptions that the Bank of England will be considering reversing that 15 basis point emergency cut from last year come the third quarter of next year.
Yeah, makes sense. I mean, you sound extremely bullish, especially given the Bank of England surprised everybody with their 7.25% growth forecast for this year. And you sound like you're even more bullish than that 7.25 percentage points. Let me ask you this, though. What do you think is the biggest downside risk right now to the pound? Because there are plenty of stories that you could point to justify the bullish price action we've had in the last couple of weeks. But where does the biggest downside risk come from?
Well, I think it was interesting. A couple of weeks ago, obviously, we had a degree of political risk priced into sterling as we went into that Scottish election. That has now somewhat dissipated, although that's just merely Scottish independence referendum 2 in abeyance rather than taken completely off the agenda. But I think in the nearer term, the greatest risk criteria is clearly the presence of the Indian variant, which could threaten that lockdown changing, the lockdown restrictions being finally taken off on June the 21st. So if we are going to see any change in that lockdown roadmap, so precluding that expected removal of all of those various restrictions in a month or so's time, then that could be a compromise in terms of that growth trajectory. And so those growth numbers would then start to be a little bit more compromised. And I think the other issue that I think is relevant is, of course, that sterling has been trading very positively on the basis of the UK being very, very much ahead in the vaccination race. But of course, the continent of Europe is now seeing the number of vaccinations ramping up quite significantly. So it may well be the case that the UK is not going to be quite so far ahead of either the US or the Eurozone in terms of the reopening prospects as we go into the second half of the year. So I think sterling has good opportunities or good impetus in the shorter term, so the next 2 to 3 months. But I think as we go into the second half of this year and certainly into latter stages of the third quarter, I think sterling's challenges become a little more significant.